What is going on YouTube? It's Sanky and we are back with another one. Alright guys, so in this one I've got a jam-packed one for you, but before we get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new and you're looking to change your future financially using the stock market, join the movement by hitting that subscribe. So we've come to the end of the weekend. First of all, I hope you've all had a blessed one and hope you're all ready for next week in these markets. Now to ensure you are, in this drop I'm coming at you with a play that will double up. I want you guys to know, despite all the volatility we've seen in the markets this week, there is tons of opportunity out there. As I say, I want to ensure that they're on your radar. So in this one, as I say, I've got a jam-packed one for you. I'm covering off all different bases, so do make sure you stick this one all the way through for me. Now, before we jump into the play, I want to share this with you guys. So up on screen, that's the US 10-year Treasury note. Now we know this has been rising over the last couple of weeks and causing a ton of volatility in the markets. But I want to bring to your attention, over the last 5 days, we've seen a cool off in this yield. It did start off at about 1.7%. It's come under 1.6%. So despite all the noise, the panic, the volatility we've seen in the markets over the last 5 days, there are good things happening. So not only are we seeing this yield cool off, guys, the vaccine rollout is happening right now, and we're moving into full economic reopening where businesses are going to start firing on all cylinders. And all of these are going to play nicely into the stock market. So as every week goes by, we get closer and closer to those funds rotating back into our growth plays. And when they do, you guys are going to see the return. So I just wanted to share that with you guys before we kick things off. All right, guys, you know what time it is. Let's get ready for the play. So the play I've got for you, that's Big Digital Assets, ticker BBKCF, currently standing $3.21. Now, over the weekend, we've seen a lot of volatility in crypto. A lot of those prices have come down. That's going to reflect onto a lot of crypto plays, meaning it's going to open up good entries next week. And a lot of them will have double up, triple up potential from where they'll be. So then make sure you guys know about it. Now, some of you might know about this play. Some of you, it might be fresh to you. Regardless, I want to make sure they're on your radar because this is a big potential play we have on our hands. Same way we picked up Mara at $2-3 and we've seen how that play's matured and grown. Other crypto plays have the ability to generate outsized returns. So I say, I want to make sure you guys know about this one. It's a Big Digital, they're diversified in what they do. They got their blockchain forensics. And as we move forward and as crypto continues its climb, things like fraud and risk are become more important. So I expect them to do well there, and they're already picking up good government contracts. They've also got their crypto exchange as well. This is one of those plays that are firing on all cylinders. User growth is rapid with this one, financials moving well. This is one of those plays where they can grow 100% year on year as it comes to their revenues. They're also operating at cash flow positivity as well, which is a nice bonus. This is one of those richly valued plays because of that growth path, and also because this is a crypto play, they are going to be packing the heat. So do expect volatility with this play. But the key is we get in at the best entry that allows us to maximize our returns and better weather the volatility moving forward in this one. So as I say, we know over the weekend, a lot of cryptos have taken a hit. So good entry should open up next week. Now, entry price on this one, we are looking at under $250 to get into this play. As I say, this is a play I expect them to double up as crypto continues this climb. We are seeing a movement in crypto where institutions are starting to adopt crypto, buy into crypto, accept crypto payments. There's a lot going on in that space right now, and a lot of these crypto plays are going to benefit as a result. So I'll give you guys the early heads up ahead of next week on this one. Let's talk about how we can level up as investors. So I want to talk to you guys about valuation. So for all my investors with exposure to the large caps, that should be all of you, whether that's through individual stocks, ETFs, indexes, what you guys got to know is valuation is sky high at the moment. Whether you're looking from a PE standpoint, a Buffett indicator, valuations are looking very lofty. Now we know some of these indexes are flying at all-time highs right now, and I'm expecting a pullback in these large cap plays. But let me tell you guys how we're going to handle business moving forward. As I say, we're moving into economic reopening. Businesses are going to start firing up. It's going to feed nicely into the stock market. So I'm expecting our large cap plays, your large cap exposure, to continue growing as we go through the summer months. But when we get to that October time, past summer, I'm expecting a pullback in these large cap plays. However, You guys got to continue investing. You want to keep investing and continue investing through the pullback. That's how you maximize your returns. As I say to you guys, you don't want to start panic selling every time you see a pullback in quality plays. And if you're sitting on large cap plays, these are quality and a lot more room to continue growing as we go through the years. So I'm just going to give you guys the heads up and the strategy, how we handle it. So if you've been rocking with the channel, you know what time it is. Now this question comes from Finn, says, I haven't been investing long. I've just started before the start of the correction, so all I've seen is red. I understand that this is a great time to start, and I've been frequently investing money in, and my portfolio is around £2,300. I've lost about 600 due to panic selling and having all my cash into plays, leaving me with not much dry powder. I realize my mistakes, but I'm still trying to wrap my head around when to sell. For example, I was in Golden Nugget and it was up 10%. I held and now it's gone back down. Should I have sold when I was up, or should I wait for the long term? Also, I mentioned I've been panic selling. I've been trying to make up my losses with having pretty much all of my portfolio into Mara with some dry powder on the side. Is that not recommended as I have no diversity? And how many plays do you suggest should be in my portfolio, which is worth around £2,500? I've learned a lot from you. I appreciate you big time. I'm young and the information you give will help me build my dream future. So when I saw this question, I just had to come and share it with you guys because I know all of you will be able to relate to at least one part of Finn's question. So let's dive into it. You mentioned panic selling. As I say, that's something we never ever want to do. We want to take your emotions out of your investing decisions, whether that's greed, FOMO, panic. You don't want any of those influencing what you guys do in the markets. We always have a strategy regardless of what the market throws at us. Now, you mentioned you were confused on selling strategy. It's easy, guys, so let me give you the blueprint. When it comes to taking profit from the plays on the way up, I say we have 3 profit taking checkpoints to give you guys guidance. When you see that stock up 25%, it's an opportunity for you guys to take profit. When you see it up 50%, that's another opportunity. When you see it up 100%, again, another opportunity to take profit. And ideally, the sooner you take out invested money and just leave in-house money, especially on the volatile plays, the better it's going to be for you guys. Now, alternatively, we also set our stop limits on these plays to limit our downside, give us maximum exposure to the upside. Also, by setting your stop limit will allow you guys to strip out emotions from the plays because you're just letting the stop limit do the selling for you if it comes to that. Now, if you guys are down on a play, we also have a selling strategy there as well. Right now, as I say, you guys have got the benefit to be able to pivot from some of your weaker plays into stronger plays that are down at the moment. Now, you also mentioned how one of your plays, Golden Nugget, moved up 10%, then came back down the next day, so you break even should you have sold out of that. Now, this is just what we call market volatility. This is market noise. So the reason you're invested into Golden Nugget isn't for those 10% movements, it's to get 100% in this play. And the way you do it is just to be patient, just ride out the volatility, and a couple of months time, it will come true and you'll make much better returns than that 10%. So as we go through this market phase, you are going to see our plays move up 10%, 5%, come back down the same 5%. But I don't want you guys to get wrapped up in that short-term movement. Let the traders benefit from these short-term swings in the stock price. You're an investor. So if you stay invested, you're going to make far better returns than these day-to-day movements. Now, you also mentioned you dumped a whole load of cash into Marathon. This is what we call a YOLO move. And this is a sign that you're letting your emotions start influencing your investing decisions, which we do not want to be doing. Now, I know because you've taken a loss, you're looking for that next play that can quickly recoup those losses. Guys, when it comes to the market, it's all about patience, it's all about balance, and it's all about being disciplined with your moves. So if you guys are just investing into quality plays and give them some time, you will make those returns regardless. So there's no need to jump into any YOLO plays or make erratic moves in these markets. With a Marathon, you got to know how to play. You got to get in at the right time. You got to set your stop loss at the right place, and you got to know when to cash out of that play because it's very volatile. And I give you guys the tools of how you can crush Mara on a week-to-week basis. Now, you also wanted some guidance on how many plays you should have in your portfolio. A good amount of plays to work with for you is 20. Now, you said your portfolio size is 2,500. I wouldn't let any play go above 5% of your portfolio. That's the rule of thumb here, because once you start letting your plays go above 5%, 10%, 15%, even more, some of you guys are rocking with portfolios where one play takes up 50% of your portfolio. If anything happens to that play, if they take a hit, it completely wipes out your portfolio. You guys don't want to be doing that. That's why I say balance is key when it comes to constructing your portfolios. So if any one play does get hit, the rest of your plays can absorb that movement. So 2,500 portfolio, that means that every play should be around £125. That's some guidance for you to work with moving forward. So that wraps things up. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Also, check out link down below to the Patreon. We could join our winning team over at the Discord. Now, over this weekend, I prepped you guys for next week, giving you growth stocks, recovery plays, and also put a play that will double up on your radar in this drop. So, one last thing to say ahead of markets opening tomorrow. Let's go!